Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, November the 8th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. The reason why I can't give you a recommendation on a particular security or strategy is because I don't know what's in your portfolio. I don't know what your risk parameters are. Therefore, what I'm doing could be counterintuitive to what you are already doing. So take these different strategies and implement them into your portfolios in your own way. Having that out of the way, we've got the Dow Jones right now. This is the ETF's DIA for the Dow Jones, and it is pushing up. Basically just barely coming off of its highs for the most part. It looks like it wants to go into positive territory, and we're kind of pushing up against this area here. The bears want to defend this low, and the bulls want to get up into this distribution area. So the bears are trying to push down to this distribution area. The bulls want to go up here. Right now we're right in between. For the most part, we're having a pretty much of an inside day. And it's because we haven't had a whole lot of economic data out today, like I mentioned before. We do have the FOMC minutes later on today, but that's kind of a lagging indicator. We've had a lot of economic data outside of that. But an inside day means when we have this distribution inside what yesterday's distribution was. So we have the value area high for yesterday, value area low here for yesterday, and the point of control. Our point of control was migrating right around yesterday's for the better part of the morning. Now we've just pushed it up a little bit and broken to the upside, making the intraday highs. So not the overnight highs, but the intraday. So we'll have to see how this works out. Market really seems to be waiting to see what those FOMC minutes are all about. Gives us a little bit of insight as to what the Fed was thinking. The only thing that I've done here is in Disney, I have on a poor man's covered call, which is a long dated call in Disney. It's basically 500 plus days out in an option that I'm long 2 of those Disney, and then I've been selling some calls against that and rolling those out ever since like September. So what I'm doing is just collecting premium and lowering my basis on this Disney trade. So I am losing money on the long calls, the long dated calls, but just like if I were to own the stock, and the stock goes down, you're kind of losing money there as well. But what I'm doing in the meantime is being active and selling these calls and rolling them out, collecting premium, and lowering up my overall basis. So in a sense, I'm losing $10 on the long dated calls, and I've been able to lower my basis by about a little over $5 by rolling these calls out through the monthlies and the weeklies. So I finally rolled out my October. I had on the October 105 calls, and I rolled that to November 110 calls and collected another 49 cents for that. The reason why I rolled it up to the 110 calls is because it's been testing this 105 area several times. I already have on November 105 calls that I've rolled out previously, and when I rolled this one, I figured I would go a little bit higher just to be safe. I thought about rolling out my November 105 calls to the December 110 calls, but we're right there at that theta contraction power zone, I guess, if you will, that I talk about in these webinars. So I don't have enough time to go into it, but I have a great chart on how you can really see theta decay drop off and or increase. But the theta decay happens a lot within these next 20 days, so you see a lot of premium come out. That's about 50% of the premium comes out in like the next 20 days if you are staying below your strike prices. So I'm trying to take advantage of that and before I roll that out to the December, and then I might look to roll that up to the 105 or the 105 November calls to the DC 110 calls. I'll have to see how that works out. But Friday's webinar is going to be on financing some puts. So if you're in the camp that I'm in and you think that the market is going to kind of slowly trickle and then go down, these puts will help you finance a long put position and take advantage of some downside if that happens. And if it doesn't, then you haven't laid out a whole lot of money for these puts, and can sometimes even get them on for free if you roll it out through the weeklies. So that's what we're going to try and do. So check us out on Friday. You can go to protraderstrategies.com and get that webinar on the poor man's covered call, and or even this one that we are going to do on Friday. If you can't take that, take it easy.